Good morning, Paul Georgie from Allendale. It's August 23rd, 2010. Well, we start out the week with no economic reports today, so the outside markets are kind of quiet. We got the dollar down 9, crude is up 49 right now, and the stock markets, stock indices, Dow is up 26, and the S&P is up about 400 points, or 4.10. The grain markets, expect the corn to be a little higher here on the opening, kind of in line with the overnight trade. News there, the crop tour, it's been talked about since Friday, came in at 164.1 versus a 165 estimate by USDA. Export sales will be watched here this week again, or anticipated, but they're going to be pretty big because of the big numbers that we seen last week. Another thing that happened late on Friday in the trade that could have some adjustments here today is that in the last 4 minutes of trade, there was over 12,000 contracts bought in the corn. So that definitely caused this market to move higher on the close. It looks like somebody wants this market to close above this critical $4.38 level. That held overnight. We're up against that level here this morning. I would think if we are able to push through that level, there will be some stops triggered. But the tug of war there is we're going to be starting harvest in many areas in southern Illinois, southern Indiana this week. This early planted corn has matured so rapidly, and I know talking to our customers, several will be starting harvest during over the next few days. So that could put some weight on this market, and we'll have a better idea of what kind of yields we're going to get once these numbers come in. The soybean trade, on the numbers that came from the crop tour, 44.9 bushel an acre, so that's almost a bushel more than what the USDA had projected, and projecting some huge ending stocks based on the U.S. numbers. So if we came in at that at the 44.9, we're looking at even bigger ending stocks numbers. The wheat market, China reported that their wheat imports were down 30% during July for the month of June. And they were also, when you compare them to where they were a year ago, they were 55% higher than last year. And what's this all mean? I mean, it doesn't mean that they're making bigger purchases here because of the problem in Russia. Their demand has increased considerably here this year because of need for energy, protein needs, feed to replace the corn and the high-priced corn that they've got that they're dealing with in China right now. So not a direct relationship to the Russian situation and the drought there, but a need for energy, and that has got the corn people excited because the anticipation is, well, the Asian markets will have to switch purchases from wheat to corn. Well, there were some comments out overnight that the Asian buyers are not ready to make those swaps yet. They want the wheat rather than corn, and that's caused the spreads here in the U.S. grain markets to move around. And we've seen with the pressure in the wheat prices over the last several days, we've seen the buying of corn, selling of wheat, especially when wheat is up at these high levels. So we're going to probably see more of that this week in the anticipation that there will be some switching, and that will be a big feature as we move through this week's trading. But expect volatility. Are the funds going to be around buying here this week again? That will be the question. They've been coming in early in the week doing some buying. We'll have to monitor that very closely. I would guess if they're not here we could see some pressure, and without the funds, we're going to have some volatility here this week. So hang on and stay tuned to the Allendale research, and we'll try to keep you informed as the best we can. In the livestock, we've had the cattle on feed report out on Friday. That was pretty much a neutral report, maybe even a little bit bearish. The trade looking for 102 came in at 102.4 is on feed. Placed 94.1. They were looking for 92.6, and marketed at 98.3 was the actual. Trade was looking for 99.7. So a little bit on the bearish side there, but cutout values were sharply higher on Friday. Also on Friday, the USDA put out their meat inventories or meat stocks, and the beef inventory is down 13% from a year ago. Total red meat down 20% from a year ago. So we're getting some tighter supplies there, and some reasons for strength in these livestock markets. Pork trade, cash markets steady here this morning. The cold storage numbers there, 28% less pork than a year ago. So a reason to see higher cutout values, as we've seen on Friday as well. The technical picture in the pork is still higher, or still up. They've got resistance around $79 in the October contract, with support around $76.30. The cattle have got resistance at $100 with support around $98.30. If you got any questions, don't hesitate to give us a call. And we've only got a week left on the Allendale Crops Yield Survey. We need your help there. So if you haven't filled it out on the web or given us a call, please do so early this week, so we can get those numbers tabulated and get those numbers to you next week. And we wish you the best at trading today. And if you got any questions, give us a call. Thank you.